Welcome to the indices and the S&P 500 here, and as mentioned earlier this week here, it's quite possible that we do have this wave 5 in through here, and it's also possible that there is further upside here as well. So we're just taking it step by step, but we just need to be aware of both situations, and let's look at them. So first of all, we were looking at well, if this is a top here, then we'll need to look at this as wave 1 here and wave 2 here, and then we're looking 3, 4, and 5, and further down through here. Now, but as it stands, we can also have this here as a little wave 1 from this point up through here, and wave 2 pulling back to the 50-60% retracement level down through here. Now, we also had a third count, which would need the market to stay above the, well, within group 2 anyway. And the first sign of weakness was 1872 being breached here. So it just really leaves two more counts, one bullish, and that would be the 61.8 retracement level from this wave 1 here back down into this area through here. Maybe we got this on a small one, yeah. So this circle here is about, I just better check that, things move when you open and close programs. So yeah, it looks about right. So that's that possibility for that area there, and well, we just got to really sort of wait for that to unfold. Now, looking at this structure here coming down through here, this is, you know, either way would be looking at a 5-wave structure through here, and I can see that it's still got more to go either here. So it can do 5 waves to here and push up, or it can push up here in an ABC and retest the closest largest number, and then move down here again as well. So it'll be this junction in here that we need to be a little bit mindful of. If you're short at the moment, you need to have your stops at 1873, just above the 1872 area through there. So we can eliminate, we had 3 counts, we can eliminate one of them with the breaking of the 1872, so it leaves these 2 counts here. So that's what we need to work through. I don't really have an answer, so we just need to, you know, we have longs in the market, and I have been placing short trades in there ever since the top here to hedge any longs and, you know, to balance the book, so to speak. Once we get through to here and this point here, we understand what's going on, then we'll remove longs and look at shorts on that side, and vice versa as well. So it's a matter of just navigating and keeping an even keel, so to speak, to go through. Look, this is the count on the sort of 15-minute chart here. Probably a bit easy to see on the cash, but this is what we trade on this market. So from the top here, we can have this down as wave 1 or A, and then an A and a B, and a C wave for either wave 2 or wave B here. And I can see here that, you know, it's got support on the lower end of group 2 here, the 65, but it does appear that in looking at this here, it does appear that we've got 5 waves down to this point here, and then a rally here. So there would be more to come from here as such. You know, if I was wrong and the market got up here and got support on top of 1872, then we'd start looking at long trades, but it would have to have a nice solid support on here and a reference point for you to move off from and to break new highs. So that retest, then new highs. So that's what you'd be sort of looking for there. But as it stands, it's all suggesting further downside. It's the same with the other markets as well. So the Dow Jones here, if you want to short here, you'll need to keep your stops above the, say, 16,433 or 437 there. Yeah, and, you know, you could end up with a nice, you know, short trade from this point here. I mean, all the indicators will tell you this is certainly overbought. I don't use them that much, so I forget about them now and again. But yeah, anyway, stop above the high there. The FTSE and the DAX have been sort of leading the charge to the downside of showing sort of weakness, but you know, I can kind of see it as corrective, because the move down here in the DAX here is this first particular wave structure in here is you know, it's got a very strong bias towards being in 3 waves here, making it an A wave. If it was 5 waves, then we would also label this here a wave 1, but it's quite clearly in 3 waves here. So yeah, so it's likely that we've got an A and a B and a C wave down through to here. Now this little pattern in here appears to be corrective, so we could look at that being a 4th wave, with the 3rd wave being 1, 2, 3, 4, and 5 into here. So 4 and a 5th here, that would be in line with the S&P 500 moving further down as well. But as I mentioned, we're moving into group 1 here, 300, 200, 100. So there's going to be supports at each one of these levels through here. If we get support on the 9.4 here, that would sort of flip the trend to the upside. You could buy on that, and also looking to add on top of the 9.5 here as well, and then also building up from that point with this high here to be taken out. But that's not there yet, and in the meantime the market is sinking into group 1. It hasn't found 92 here. 2 is the pivot within group 1. If that becomes the retested resistance, then we're likely to see the market below the 9,000 here. So if a bigger picture opened up for the S&P 500, then it would also open up here as well. But there is short-term support in amongst here. Obviously, this is overbought, oversold here. The FTSE, same pattern as well, and also here you can see this first move down here and being, in a quite a clear sort of 3-wave structure here, 5 waves here, corrective, and then another 5 here. So it does make it, appear to be an A and a B and a C. And there is support at the 66.50. Yes, it can come lower and so forth, but we can see that this trend here is quite similar in size to this one here. So, and that's quite normal. There's equality between wave A and C, and yeah, let's just see how it sort of unfolds. But the idea here would be to count 5 waves within this wave C here. So 1 and 2 are simple. It'll be look at 3 and 4 here and 5 here. So I think I did do a bit of a count in here somewhere. Part of it's easy. The first little bit down here is very easy. That's easy. It's a bit in these 1s and 2s here. It's a little bit choppy. So the 3rd wave here, I don't know. It could be, you could do it in a couple of ways, but I was looking at this being the 3rd to here, an A and a B, and C for the 4th here and a 5th here. I mean, these markets will end before the US market ends. So we'll see any upside here first. Of course, these will follow, so to speak. But these guys were the first ones to move down. So they'll be the first to move up. Now the ASX 200. Everything's going pretty much according to plan. A little bit like the S&P 500 as well is, how big can this, corrective pattern become? And yes, it can become much larger as well. We can have a top in play here. I'll just see if we've got a, yeah. I mean, all the way up from this trend here, all the way up through here, that we've been looking for a top, here for quite some time, and it's a little bit tricky to pull all this apart here. But well, look, if this low here gets taken out here, then you've got a much larger correction unfolding from that point there. As it stands, let's just go back into the intraday here. We were looking at 5 waves down through here, and yesterday we were looking for a corrective move off the 5400 here, and it could go far back as the 5450 through here. That wasn't the case, but it could have done. There's still a little gap here to be covered later on. There's also a gap down on the cash market at 5400 as well. Let me just check that. Yes, so we could see the cash market moving down to the 400, which will obviously pull this down further. I've labeled this here as a wave 1, but it could also be an A wave as well. But I don't know, because if we get this move down here in sort of wave A, then this is going to put this wave C here, down, testing these lows here. So it's more likely to be a bit of a 3rd wave opening up here. So if that's the case, then we'd be looking at this being from here would be down for 1, back for 2, down for 3, 4, and 5, such here. This wave here would actually be longer than this one here if it was going to be a third wave here, down through to here. So anyway, we're looking to be short, you know, on a breach of the 54 there, so you should be short from that point. See if I've got that in smaller version here. So let me just check on this here. It's quite possible from here that we could get a retest from here of these supply levels through here, and then move down from here, and we will get bounces through here. I mean, the futures market has got the move already built in. The cash will drag it down, and there may be the morning squeeze on a bit of a rally here, just to take out people's stops, which are, you know, the commercial profits basically. So anyway, that's the resistance here, and further downside is expected. It's just that you're moving through group 2 here, so it can get a bit bouncy through all this. So you really need to leave your stops, you know, out of the way, probably up at the 54.20, but depends on how you trade, I suppose. Alrighty, cheers.